AnneMaries Baiynd, author and financial analyst. She's a trader, author, financial analyst, best known for her book, The Trading Book Course, a practical guide to profiting with technical analysis. She has a background as a neuroscientist researcher. We're going to have to ask her about that.
There she is.
Good
You can
morning.
ask her right now. She snuck in on us. Hi, Anne-Marie. How you doing Monday morning?
I am doing great. I seem to have brought the Alaskan weather back with me.
Were you in Alaska?
Yes, actually.
Did you do a
I
cruise?
have been. No, we did actually, we did some sailing for sure.
Oh, fun.
But it was hiking and seeing the region. It was really great. It was
That's the
really, really
place I've
great.
always wanted to go is Alaska. So you've been there, haven't you, Joel?
Yeah, did a cruise there a couple years ago. I'd encourage everyone to see that frontier. But AnneMarie, I just was reading your background there as you were snickering, and you have a background as a neuroscience researcher. So could you tell us what you brought from being a neuroscience researcher to the markets, if anything?
That's interesting that you asked that question. My role as a researcher was we were researching something on, I don't want to get all geeky, but there's something called a vagal nerve, and it's for certain kinds of epileptic seizures, it triggers a response and it runs up that nerve, and that nerve is like it's got tentacles. It wraps around your brain, and it causes these intractable type of epileptic seizures. And so my job was actually as a statistician to see if a vagal nerve stimulator could stop an epileptic seizure from occurring. And so really the love of searching out for patterns in situations really has been the thing that I've brought from that old career into trading. It's all about looking for those patterns, right? Reversions to and from the mean.
I was always thought, I've been involved in different trading operations. I always wondered if I could have a trading operation where, like, I have a little zapper, under a guy, and if he's like, if he's losing money, just, give him a little zap and see if that affects his trading at all. But let's get to the markets here. And I was commenting earlier on like the volatility, and I'm looking at a really precise range here between 2105 in the S&Ps and 2115. We've just been cutting through that area just like a hot knife through butter. I have some levels in that area, but when you get that big of a range, a 10-point range in the S&Ps where, in Friday session and also in pre-market trading, there just seems to be like really no one making a stand, in between those levels. Do you try and trade the range something on that? Does it give you, any clues to the overall market? What's your take on that kind of trading activity?
You know, this has been it's sort of been the hallmark of the last few months, right? If we look at a weekly chart at the SPX, all we see are reversal candlesticks in general since maybe February. Everything is up and then it's down and then it's up and then it's down. And really the only thing you can trade is a range. People are looking for resolution, but here's what happens. We've had a little bit of technical divergence that's run for months. And so about last October, we started seeing a lot of technical divergence, and the market has essentially sort of been a sloppy sideways event. But what's happened in that space is that technical divergence is sort of flattening out and becoming a little bit less prominent. And so all of a sudden, what we see are these buying momentums where essentially if we have any kind of sharp pullback, we have been very well rewarded by picking those bottoms up. And I noticed that the 10 and 20 weekly moving averages have become fairly good lines in the sand for where these sharp pullbacks sort of stabilize. It's not getting anywhere near the 50. And so all we're left is with range trading. And if you're looking for net returns on a yield, you're going to fall into a space that is really going to be difficult. That being said, we can look at last year's. I just asked for, hey, listen, where's the best place to find the top performers of the prior year, the prior 6 months, and that sort of thing. And the reason that I had asked that was because I was doing some research, and the only thing that I can look at in terms of saying, hey, where can I capture movement, is to look for those ETFs or those performers that have been really performing well outside of their average. Like last year, it was the IYR because it was up like 30-something%. And so that's well outside of a statistical band. So at the beginning of the year, I said, hey, listen, you better watch this IYR. It's going to pull back. And then I put out another thing on Yahoo Finance as a contributor. I said, hey, listen, this one's getting ready to give back. Just got to wait for a retest. So what we have to do is really start looking for those things statistically that are outliers, and then work on looking at that reversion to the mean. And so the IYR is one of those things. The XLF moving in the other direction, underperforming last year, and that one's been holding itself really well right now. Outperformers are things like the healthcare, and those, I mean, they're like monsters, really aggressively moving. So we have to watch that as it continues to bounce up against resistance and starts to show real weakness, maybe to look there. And then I noticed some China fund named CNXT is up like, I don't know, 100%, something crazy. And so those sorts of spaces are really where you're going to be able to sort of really stage movement. Otherwise, we're just caught in dead seas.
So what gets us out of these dead seas? What is the catalyst that actually drives this market up and breaks us out to new all-time highs? Or is there no catalyst to be had and eventually we're just going to crater?
You know, that is a very good question. I honestly believe we should have some kind of blow off top, some one last extension
where all the shorts throw
before
in the towel.
Yes, really. That's really what I'm looking for. You know, I mean, we've got so many things happening, like, you know, all the buildup in the movement in the China South Seas, what they're getting ready to do. The Russians are starting to make noise again over there with some things. And we've just got so much unrest politically that it really wouldn't take too much to tip that over the edge and have us start coming in, because we've had so much of a rise over the last couple of years.
Yeah.
And so that's really what I'm looking for, that blow off top. I thought by September, I've been yapping about September, I felt like the Fed might have something to do, or some sort of economic something or the other that says, hey, listen, this is it. And it either punches us up for one last blow off top, or we just start a little bit of a slow bleed downward into support. But I do not see the market significantly extending and holding upside regions this year. I just don't see it.
AnneMarie, on the show a lot, especially on Mondays, we talk about, the Barron's pop or the Barron's drop, and they really have a significant move on stocks. I know you have your method of technical analysis that you like to stick to. Do you ever get involved in, like something like Disney, maybe a little bit overdone on the upside, and you'll say, hey, yeah, maybe it's going up, but not now. Will you ever, make trades or take a look at it and maybe try and find a technical spot? Or if, let's say, if you came in long Disney and it hit your target, would you take the money off the table, or is it just something that you just stick to your own analysis, you don't pay any attention to?
Well, I have, there's a running joke around here that I have the attention span of a Cocker Spaniel, which is very small, if you know anything about those dogs. So I try not to introduce any kind of noise that comes from outside analysis, but I do look for outliers. I look for charts that are expanding with very low momentum events or contracting sharply from a price perspective with very low momentum. Anything that does not come together, or something that's expanding rapidly away, it's either in something that I like to call an organizing event, where everything begins to just follow and it breaks a normal pattern of 2 down, 1 back, 3 up, 1 down, that sort of thing. But that's really all I will look for. I will look for divergence in patterns that either tell me I'm going to have a shift in the overall change, or I'm having a shift that I can play into what is an overall pattern that I can slip back into. But I really don't look for those kinds of spikes and holds, because I think the story gets told before the writing is up, and the story gets told with those candlesticks.
AnneMarie, what is on your radar? Because you've talked about different sectors outperforming there, and I know you've been looking at some charts there, probably even over the weekend here. And what is on your radar for this week? What are you looking at?
I'm looking at watching the IYR come back, as I mentioned earlier, because it came up and retested that 77 area and failed. It seems to be having some support underneath. But if it loses that 74.50, I see that really getting down into maybe 67, 70, something that brings it closer to the norm of its performance over a 2-year period, right? Because it's outside of that space.
Right.
And this week, I really am going to be looking at some of these healthcare sectors to see if they are going to give us one more push to the top, or if they're going to collapse, because there are a couple of them. Let me see if I remember the name of this one. There's one called BBH, Bravo Bravo Hotel.
Mm-hmm.
And that one's double topping from about early or mid-April to where it is right now.
That's the biotech one, AnneMarie.
Yes.
Okay.
And so for healthcare and biotech,
okay,
those
gotcha.
two guys are really performing really, really well. And so I'm going to be looking for this either to give us one more blast to the top, or begin to show weakness and start pulling back into the daily 50 and then back down into the weekly 50.
So you're still
those
thinking
are
that
the really ones I'm going to focus on.
I see all those tops that you're looking at there. They kind of jump out like a sore thumb. Are you one of those technicians that you kind of look at the chart for like 2 seconds, and if it jumps out at you, then it's easy to see? Or if you got a Harlan Pine, you say, if you got to squint your eyes to see it, you're reaching.
Yeah. If I have to look at it a long time, I just move on, because I need to. My philosophy is good trades are not lonely trades, and my goal is not to be the leader of the move, but I do want to be the first adopter. And so if it looks like it's getting ready to go and a lot of people see exactly the same thing at the same time, it's going to cascade very nicely. And because I have a very low patience threshold and I have the attention span of a Cocker Spaniel, I want to get in, get out, get done, and move on. I just have a hard time sitting in a chart waiting for it to move. It makes me crazy.
It won't move because you want it to move. Real quickly, you have been a staunch supporter of Gilead Sciences, and this stock has outperformed other biotechs here. Are you getting a little warning, Will Robinson, here at the double top here in Gilead at the what is this, 114, 113 level here, or what are you looking for in Gilead today?
I think you're right. It falls into that same space of this one, I believe, because it's been a front runner, it's giving us that last push up, to me, it's because it sat in that really wide congestion type zone. For most of the year, it's been in a really significant congestion zone, maybe from 105. But since it's breached out over 105, it's now coming back into last year's highs. And really, I see a lot of trouble there. So this one, because it's always been that front runner, it's got that one last press to the upside, and then it's either going to flatten out or begin to drift downward. I don't see anything really collapsing at this juncture. I just see it not being a place for any great returns. It's, it's kind of like how Apple's chart looks.
Mm-hmm.
Yeah, it's good for a little shove, but I'm thinking it's not going to 150 anytime soon at all. It's
All right,
just
but
not.
quickly before we let you go, we had some Dow theorists on Friday, and they were talking about the
Ooh.
breakdown here in the transportations as a potential warning
Mm.
signal. You look at that IYT chart, I know you'd be running from being long that thing. Just any thoughts on the Dow theory and the breakdown here in the transportations?
Well, it seems to hold. The problem is that chart is generally jagged a lot, and so I think that is a glaring sign because we transport goods, and so it's
Yep.
definitely something to watch there.
Okay, AnneMaries Baiynd, author and financial analyst. She joins us every Monday or so to talk about her outlook for the markets and the way she looks at them. Anne-Marie, a pleasure as always, and we still got to get you into the world headquarters here soon.
I know it.
All
I'm
right,
ready.
all right,
I
thank
just
you.
need to put my parka on.
Okay, all right, we'll talk to you
All
soon.
right, take it easy.
Thanks,
Bye bye.
Anne-Marie.
Thanks, Anne-Marie.